as someone who I'm day trading, I'm swing trading, and we're doing crypto, we're doing stocks, and it's exhausting, frankly. I mean, a Monday should be, you should be refreshed, but by the end of Monday, I'm like, all right, is it Friday yet to get a little downtime? But at the same time, it's exciting that you never know what's going to happen. I mean, there's been periods in the market where the market just goes up a little bit, 0.2% every day for months on end, and you just kind of get lulled to sleep. This certainly isn't that type of environment. Yeah, so we have seen Bitcoin kind of go sideways and chop, which is it's interesting. So we had the big move down from 69,000 basically to 33,000. Again, that happened to be a perfect parallel line, perfectly parallel connecting the lows. So you can see how recently we've hammered on it twice. And then this was where the invasion of Ukraine kind of started, I believe, and kind of got crazy there. And again, notice how you had this one big update where you heard about a lot of the oligarchs starting to put their money in Bitcoin to avoid sanctions. But then again, we've seen it come back in. And basically, the idea here is that, yes, it's a risk-off environment, but from where we were in January, you're starting to see more and more worry about the global economy. And what does that mean? Well, it means the Fed may not be as aggressive in raising rates. And I think that explains why Bitcoin isn't getting crushed. And if you look at the tech sector, if we look at the NASDAQ 100, which trades very similar to Bitcoin, notice here was your low, and same thing, you've rallied off, you're coming back in now, but you haven't taken out those lows. So because the Fed may not have as much energy or stamina to raise rates, you're starting to see technology get a little bit of money flow. Now, again, I still think ultimately it goes down. I mean, let's just talk basically here is that the chart on Bitcoin is making what we call a megaphone pattern. You have the big move down here on Bitcoin straight down to 33,000. And then you have this here and this here. And see how it's kind of getting a little bit further apart. You have the down move, up, down, up, down. That's what we call a megaphone pattern. Now, when you're coming off of a big drop like this, that's actually what we call bearish consolidation. And the probabilities dictate that eventually you do break the downside support. And that's where my 20,000 or even sub 20,000 target comes in. So I do still think we're going down there. The chart's actually starting to tell us that. Inevitably, something will give in the Russia conflict, whether it's peace or just some sort of resolution. And then my thinking is that the Fed will have to come in because of this added inflation with oil going up, wheat going up. It's going to create more inflation in the system. The Fed is going to have to be even more aggressive over the next 6 to 12 months. That's going to come put pressure on Bitcoin and risk assets for the next leg lower. Yeah, I mean, remarkable move. I still remember last night when the futures opened and oil, right away, oil was almost at $130 a barrel. Incredible. Now, we have seen a big reversal here back to 117.75. You're still up a couple dollars on the day, but it certainly isn't the crazy 13% move that we saw in the overnight at one point. Now, what's going on here is you obviously have the worry, right? So fear and greed drive markets. And in this case, the fear that maybe the world kind of says, hey, we will not buy Russian oil anymore is driving price up. I'm kind of counter trend in this. I believe that what's going to happen is you're going to see demand destruction. So meaning that the high price of oil is making people in the US here. And I've even talked to people out there and they're already saying, you know what, maybe I don't want to drive to my parents' house 1,000 miles away because that's going to cost me X amount of dollars to fill up my fuel tank. So you're already seeing the demand destruction. Now put that on a global basis. And then you have to start thinking that with the midterms coming, there's definitely going to be some sort of push to either do a nuclear deal with Iran, which will ultimately allow them to sell more oil on the open market. Maybe Venezuela. I've heard that the U.S. officials are meeting with Venezuela. There's going to be something that's going to be done here to bring oil down. So with demand destruction and potentially these other avenues, you have to think that oil is likely going to pull back here. And that doesn't even go into the possibility that there's some sort of positive resolution with the invasion of Ukraine with Russia that could also add additional oil or at least take expectations down of high oil price. So really wild stuff, guys. But again, I am short oil here. I am short. I'm actually underwater a little bit here from where I started shorting in the last couple of weeks or so. But certainly I do think you're still heading back to probably the 100 or sub 100 level. It is amazingly important, more so than at any point since 2008, 2009, because you have to look at the VIX, right? The VIX tells us how much volatility is in the system. There was one point a couple years ago where the VIX got under 10. I mean, there was no volatility in the system. That environment, you can do bigger position sizes because you're not going to get the crazy swings. In this environment, whether it's oil, whether it's stocks, I mean, you have stocks today alone that were down 10%, then rallied up, and we're talking mega caps here, like $50 billion, $100 billion market caps that are swinging 10% intraday.
Yeah.
I mean, that type of volatility, you're going to get wiped out if you use leverage, let alone, making sure it's the proper percentage of your portfolio. So you got to be careful. What I do is before I enter a trade, I say, okay, how much money will I allocate to this trade if it's a full position, right? And then what I do is I say, okay, now I'm going to divide it into 4 segments, and I'm going to start with 1/4 of that. And that dips my toe in the water. And then it enables me to kind of, if I'm not getting the exact low of a buy, I can then average down, but never go over that full amount of that I was willing to commit. And that really is helpful in these volatile times, because when you do get that mega bounce or big pullback, you're going to be in the money very, very quickly.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much, much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.